Thank you for joining us today for the SSI presentation. I'm glad that you're here and just want to let you know that this is being recorded and it will be located on our YouTube channel for future viewing. So these presentations, we did the SSDI presentation yesterday. Today is SSI, and these presentations are being made possible by the National Expansion of Employment Opportunities Network. It's also called the NEON Grant. It's funded by the Office of Disability Employment Policy in the U.S. Department of Labor and in collaboration with the Office of People with Developmental Disabilities, OPWDD. The trainer today is subject matter expert Michael Dalto. Thank you for joining us and enjoy your presentation.
Thank you very much, Lisa. When my son was very young, he was toilet training. Um, this story occurred, and if you ever meet him, please promise that you won't tell him that I told this story in public. But he had been practicing this new skill for a while, and we felt like he was ready to go out on sort of a test run. So he got dressed in his big boy underpants, no diaper, and I strapped him into his car seat and I drove about 15 minutes. And every single minute I turned and asked him, "Do you have to go?" And he kept shaking his head no. And I got to our destination. I parked the car. I unstrapped him. I lifted him out of his seat. And those of you who have kids know what I discovered. He was soaking wet. And I said to him, "I asked you every minute if you had to go. Why didn't you say something?" And he looked at me with big innocent eyes and said, "But I wanted it to be a surprise." And that was the day that I learned that my son might have a future working for Social Security, because you usually get the information you need from them, but it's often just a little too late. So I hope you're getting this information in a timely way. As Lisa mentioned, yesterday we talked about Social Security Disability Insurance, SSDI, and the work rules that apply to that benefit. Today we'll be talking about the other type of cash benefit that people with disabilities receive from Social Security based on disability, which is Supplemental Security Income, or SSI. Just as we did yesterday's session, this session is designed to be interactive and is guided with a bunch of questions, most of them true or false. So please feel free to participate. So first question, SSI is a cash benefit for people who either have a severe disability or are at least age 65 and have low income and low resources or assets. True or false? Okay. That one is true. To qualify for SSI, a single person has to either have a severe disability or be at least 65 years old. They have to have so-called countable income under $1,054 a month in 2025 in the state of New York. And they have to have countable resources. That would be assets like bank accounts under $2,000. Second question, on average, SSI benefit payments are higher than SSDI benefit payments. Is that true or false? That one is false. In fact, SSDI payments on average are substantially higher than the maximum SSI benefit. The average SSDI benefit in 2025 is $1,580 a month. The maximum is over $4,000 a month. but the maximum SSI benefit is only 1,054 a month for an individual or $1,554 a month for a married couple. Third, a person who receives SSI in the state of New York is automatically eligible for Medicaid. Is that true or false? That one is true. Now, when we talked about SSDI, we said that that comes with a medical benefit, namely Medicare, but there's a 2-year waiting period for it. A person has to be entitled to SSDI for 2 years before their Medicare starts. With SSI, Medicaid eligibility is immediate. There's no waiting period. As soon as the person becomes eligible for SSI, they are immediately eligible for Medicaid at the same time. Number 4, a single person who gets SSI can't save $2,000 or more without losing SSI or Medicaid. True or false? That one is false. There is a $2,000 resource or asset limit for an individual, $3,000 limit for a married couple. But not every resource, not every asset counts against that limit. So there are some ways that a person can save more than $2,000 or $3,000 and still keep SSI and Medicaid. And my favorite one is called an ABLE account. This is an account, special account that's owned by a person with a disability. Their disability had to start before a certain age. Currently, when this is being recorded in 2025, that age is 26. The person had to acquire their disability before they turned 26 to be eligible for an ABLE account. Although they could be any age when they open the ABLE account. They could be 90. They simply have to have been disabled since before age 26. But on January 1st of 2026, that age requirement will change. And a person only needs to have been disabled since before age 46 to qualify for an ABLE account. So people who became disabled a bit later in life will be eligible for ABLE accounts starting 2026. Now, the first $100,000 that a person acquires in their ABLE account does not count against the resource limit for SSI, which means that a person, an individual, unmarried individual can actually save 50 times the usual $2,000 resource limit for SSI and still be eligible if they put that money in an ABLE account. So anyone can contribute to a person's ABLE account, the person with a disability who owns it, family, friends, neighbors, agencies, even strangers. But there's a limit on total contributions to an ABLE account in a calendar year. That amount is currently $19,000. So if multiple parties contribute to an individual's ABLE account during the year, the total contributions for all of them can't exceed $19,000. However, if the account owner, the person with the disability, is working for pay and they don't have a retirement account and their $19,000 contribution limit has been met, the individual who owns the account, the person with a disability, and only that individual can actually contribute extra to their ABLE account. They can contribute a little more than $15,000 a year but not more than the amount of their earned income from work, um, over and above the $19,000 limit. Once the money is in a person's ABLE account, they can withdraw it and spend it on a wide variety of expenses: housing, food, clothing, other ordinary living expenses, education, transportation, employment support, health and wellness, assistive technology, personal support services, financial management, even funeral and burial expenses, which obviously would be the last expense a person's ABLE account was used for. And to get more information about ABLE accounts, which are a great way for people to be able to save money and still keep SSI and Medicaid, you can go to the website for New York's ABLE account, mynyable.org. Or if you'd like to look at ABLE accounts in other states, you can go to ablenrc.org, which is the website for the ABLE National Resource Center. So let's do a quick comparison of SSDI and SSI. So this is just a quick side-by-side comparison of the two benefits. So we've got eligibility. We talked about eligibility for SSDI yesterday. Person has to meet Social Security's disability definition. That is also true for SSI. A person has to meet Social Security's definition of disability unless they're at least 65 years old. Then they could get SSI based on age, even if they're not disabled. And that definition of disability for adults is the person's has a disability that has lasted or is expected to last at least a year, or it's a terminal illness, and it limits their ability to work. It prevents them from doing what's known as substantial gainful activity, or SGA for short. Now, in order for a person to get SSDI, either the individual or in some cases a parent or a deceased spouse must have paid into the system, must have worked and paid Social Security taxes on their earnings for a long enough period. That's not the case with SSI. SSI does not require the individual or anyone in their family to have ever worked, but it does require the individual to have limited income and limited resources. Incidentally, let me explain the difference between income and resources. I have a trainer friend who likes to say income is what you get and resources are what you got. So if you receive money during a calendar month, that's going to be income, and that will be at least the countable portion of that income will be subject to the income limit. If any of that money is left over when the next month begins at midnight on the first day of the next month, if the person has not either spent that income or converted it to a form that does not count as a resource, like putting it into an ABLE account, any remaining amount that carries over into that next month becomes a resource, and it remains a resource as long as the person has it. So it's income the month you receive it, any remaining amount that continues into the next month and future months becomes a resource. So the benefit amount, as we said, is on average significantly higher for SSDI than for SSI. It's important to note that SSI benefits can be reduced by other income. We'll be spending a lot of time today discussing that. They can be reduced if the individual getting SSI receives free housing, or if the individual with a disability who gets SSI is married and their spouse has money, their spouse's income can affect their SSI. Or if the person getting SSI is a minor, a child under age 18, and they live with one or two parents, their parents' income can be partially counted against their SSI. Moving on to the resource limit, SSDI does not have a resource limit. A person could have millions of dollars in their bank account and still be eligible for SSDI. Not so for SSI. SSI does have that resource limit, $2,000 for an unmarried individual, $3,000 for a married couple. As we discussed, the medical insurance that comes with each benefit is different. SSDI provides Medicare, but only after a 2-year waiting period. SSI provides Medicaid, and it provides immediate and automatic eligibility for Medicaid with no waiting period as soon as the person starts getting SSI. So when are these benefits received? Typically, SSDI arrives in a person's bank account on the third day of the month, although some people will get their SSDI payment on a different day of the month, such as the third Wednesday of the month. They will not receive it on the first of the month, which is reserved for SSI payments. The SSI payment will arrive on the first day of the month. The exception to the typical day of the month that either SSDI or SSI arrives in a person's account is the case if the regular payment date falls on a weekend, on a Saturday or Sunday, or a holiday. If that's the case, then they'll get their payment the last previous business day before the regular payment date. So a person who's getting SSI would ordinarily get their payment on the first of the month. Suppose the first of the month is a Saturday. They would actually get their SSI payment for that month the previous day, the 30th or 31st of the previous month. All right, so just a quick side-by-side comparison of SSI and SSDI to make it easier for you to compare them. And we'll return to the PowerPoint. So there is a logic to the SSI program, and that logic helps to understand the work rules about how work affects SSI. So SSI is designed to help a person pay for shelter, for housing. And if a person is eligible for SSI and they have no other income, it makes sense that ordinarily they should get the maximum SSI payment because they need all of it to meet a very basic need for housing. But if they have other income, usually they'll get less SSI because, in theory at least, they don't need as much to pay for their housing. If they're getting some other money that can go toward housing, they don't need as much SSI. So as other income goes up, SSI usually goes down. And the reverse is also true. As other income goes down, SSI usually goes up. So the relationship between SSI and other income is like a balance or a scale or a seesaw. As one side goes up, the other side goes down, and vice versa. When we get into the work rules, keep that image in mind. It will be helpful. All right, question 5. If a person who gets SSI goes to work, their SSI payment will be reduced dollar for dollar by their earnings. Is that true or false? Luckily, that is false. Their SSI will be reduced by their earnings, but only by less than half the amount of their before tax earnings, their gross wages, or their self-employment income before taxes. So, for example, if a person on SSI gets gross wages of $1,085 a month, their SSI will usually be reduced by only $500 a month. So, yes, their SSI will go down, but their net income will be much higher because although they'll lose $500 of their current income, their SSI, their income will from work will be increasing by 1,085, and their net income will increase by $585 minus the little bit of tax they might pay on their earnings, on their wages. So they will come out ahead financially by working. So let's look at an SSI calculation sheet now. This is a simple Excel spreadsheet that you can use to help individuals estimate the impact of earnings on their SSI benefits and on their net incomes. So the SSI calculation divides income into two kinds: unearned income, other than SSI, that appears on line 4, and earned income, which appears on line 8. So what's the difference? Earned income is just money that a person receives as direct compensation for work they did. Examples would be wages, salaries, tips, self-employment income or business income, royalties, money the person might receive, for example, if they sell a movie script. Those are all examples of earned income, money that a person received as direct compensation for work they performed. And unearned income will be virtually everything else. Examples would be SSDI payments, uh, interest, dividends, pensions, annuities, unemployment benefits, workers' compensation benefits, veterans benefits, and a variety of others. There are a limited number of types of income that don't count at all, but we won't be discussing those today. Unearned income in the SSI calculation does not include SSI payments themselves, only other income besides SSI. So to use this calculation sheet, you do all of your data entry in column B where the dollar signs appear, and down towards the bottom, the spreadsheet will tell you an SSI payment and a person's net pre-tax income. So we are first going to do a simple exercise for a person receiving only earned income. So this is Tupac, who starts out with the maximum SSI benefit for an unmarried individual, which is $1,054 a month in the state of New York. He starts a job earning $1,285 a month gross wages. That is earned income. And we want to figure out how much SSI he'll get and what his net pre-tax income will be. To figure that out, you can open up your SSI calculation, find the earned income line, line 8, and in column B, where the dollar sign is, enter 1,285. Once you've done that, you can answer the two questions: how much SSI he'll get and what his net pre-tax income will be. And those answers, after you've entered $1,285 of earned income, will appear on line 30, the SSI payment, and on line 37, his net pre-tax income. So let's see what the correct answer is. If we enter $1,285 of earned income, line 30, the SSI payment shows us $454. But the net pre-tax income on line 37 is $1,739 a month. So even after taxes, Tupac will have substantially more money working than not working, even though his SSI is reduced. Let's move on. Question 6, a student under age 22 who gets SSI can earn up to $9,460 a year in 2025 and not have their SSI reduced at all. Is that true or false? That is true. There is a safety net. Safety nets in the SSDI and SSI programs are known as work incentives. There's a work incentive called the Student Earned Income Exclusion that lets a student who is under age 22 earn up to a certain amount each year while keeping their full SSI payment and not having it reduced at all. The student does need to be enrolled in either school, could be grades 7 through 12, or college, or what Social Security calls a job training course. And they have to be regularly attending classes. So if they're in grades 7 through 12, they have to be attending at least 12 hours a week. If they're in college, they have to be attending classes at least 8 hours a week. And if they're in a job training course, have to be attending at least 12 hours a week, or at least 15 hours a week if there's a shop class involved. So the attendance requirement is not very demanding. When I was in high school and I showed up for classes 12 hours a week, they did not call that regularly attending school. They called my mom. So let's see how the student earned income exclusion works for Tupac. Let's assume that once again, he started out on the maximum SSI for an individual, 1,054 a month, but he's a 17-year-old student and he starts a job earning $1,285 a month gross wages. So how much SSI will he get if he uses the student earned income exclusion, and what will his net pre-tax income be? So if we go back to the SSI calculation and put the $1,285 of earned income back in on line 8, line 9 is the student earned income exclusion. It shows that he can deduct all of his wages up to $2,350 a month. I haven't encountered any students under age 22 who are making that much money in a month. So, in my experience, a person can usually deduct all of their earnings each month because they don't exceed that monthly amount. But there is the annual cap of $9,460 a year. So with the student earned income exclusion, we deduct all of the earned income up to $2,350 a month. Tupac is earning much less than $2,350 a month, only $1,285. So we can deduct the entire amount and enter $1,285 on line 9, the student earned income exclusion. If you do that on your sheet, it will tell you how much his SSI payment should be for this month and what his pre-tax net income will be. So give that a try, see what answers you get on lines 30 and 37. And now I'll do it. $1,285 for the student earned income exclusion. That reduces his countable income to zero and qualifies him to keep the full SSI payment of $1,054 a month on line 30. And his total net pre-tax income is $2,339, way more than he started out with. Right. And before we move on to the next exercise, let's change the student earned income exclusion on line 9 to 0 to prepare for our next work incentive. So the student earned income exclusion is a great work incentive. It encourages students to get some paid work experience. This is smart public policy because there are a variety of studies that show that if people get work experience in their teens and early 20s, they are much more likely to work as adults and to not be as dependent on SSI indefinitely. So moving on, what about a person who is not a student under age 22, but who meets Social Security's definition of blindness? Question 7, a blind person can keep higher SSI payments while working if they pay for blind work expenses, but the expenses must be needed for work and be related to blindness. Is that true or false? That one is actually false. It's partially true, but not completely true. Blind work expenses are expenses that a blind person receiving SSI pays for out of pocket that are needed for work. But the expenses don't have to be related to blindness. When you see the term blind work expenses, blind refers to the individual. The individual on SSI has to meet Social Security's definition of blindness, but the expenses only have to be needed for work. They don't have to be needed for blindness or any other disability the person may have. And blind work expenses include almost all work-related expenses, those that are disability related or blindness related, those that are not. It even includes taxes withheld from the person's pay and the cost of meals that they eat on the job. Now, blind work expenses can actually offset up to 100% of a person's work-related expenses. So, for example, if a blind person pays $300 a month for blind work expenses, for work-related expenses, whether or not they're related to blindness, if they use the blind work expenses rule and they pay for that $300 a month, they'll be able to keep up to $300 more SSI while working than they would receive without using blind work expenses. Now, just a reminder of Social Security's definition of blindness. The same definition that applied to blindness for SSDI also applies for SSI. So Social Security calls it statutory blindness. And to meet that definition, the vision in the person's better eye with correction, with glasses, if correction is possible, has to be 20 over 200 or worse, or their field of vision has to be 20 degrees or less. They meet that definition and they get SSI, then when they're working, they can use blind work expenses. Some examples of blind work expenses: I mentioned all taxes withheld from a person's pay can be deducted as blind work expenses. Any mandatory pension contributions that are taken out of their wages, the cost of meals they eat at work, none of those so far are related to blindness, but they're all related to work. Guide dog expenses, transportation, other than buying and insuring a vehicle, but there's another work incentive for that. Work-related training, assistive technology, medical needs, uniforms, work-related equipment, union dues, professional association fees, and most other expenses that are related to work. And you've noticed that some of those were disability related, some were not. The expense for a blind work expense only has to be work related, does not have to be disability related. So let's go back to Tupac again and assume that once again, he starts out with the maximum SSI of 1,054 a month, but he's not a student and he is blind. Once again, he's earning $1,285 a month gross wages, and he's paying a total of $500 a month for taxes withheld from his wages, meals he eats at work, and transportation to and from work. So we want to figure out how much SSI he'll get if he uses blind work expenses and what his net pre-tax income will be. So once again, we've got $1,285 of gross wages, which is earned income. And he's going to be able to use blind work expenses for all of the $500 of expenses listed on slide 81. So going back to our SSI calculation, we've got $1,285 of earned income on line 8. Now let's look for blind work expenses. There it is on line 18. And that's where we'll enter the $500 for blind work expenses. So please go ahead and do that. And then you can answer how much SSI Tupac should get on line 30 and what his net pre-tax income should be on line 37. Okay, and now I'll do it. So line 18, blind work expenses, $500. Moving the cursor out of that field. Line 30, SSI payment is $954. That is exactly $500 more than the SSI amount that Tupac would receive if he were not blind and were not using blind work expenses. That was the first calculation we did for Tupac. We saw that not using any special work incentives, his SSI would go down to $454 a month. Using the blind work expenses, it's $954 a month, 500 higher. And that's enough to offset dollar for dollar the $500 a month of blind work expenses that he pays for. So his net pre-tax income on line 37 is $1,739 a month. In fact, that is his net after-tax income because we used the taxes as one of the blind work expenses. So, so he's going to be definitely better off using blind work expenses than not. It's a great work incentive. All right, we're going to move on. So let's go back to line 18, blind work expenses. Change the $500 to zero to prepare for our next work incentive. And on to question 8. A person who is not blind may use impairment-related work expenses, or IRWEs, to keep higher SSI payments while working. Is that true or false? That is true. Um, we looked at impairment-related work expenses, or IRWEs, when we did the SSDI portion of the training. In that case, IRWEs were used to subtract from a person's earnings to help keep them below the substantial gainful activity, or SGA amount, to enable them to keep their full SSDI benefit. IRWEs can be used for SSI as well, but they're used somewhat differently. They're subtracted from a person's countable income to reduce their countable income and keep their SSI higher. But there's a downside to IRWEs compared to BWEs. IRWEs don't let a person keep as much SSI as BWEs do. So, in fact, IRWEs will typically offset only half the amount of out-of-pocket expenses as BWEs do, and BWEs offset up to 100% of the expenses. So if a person is blind and they get SSI and they have work-related expenses, they're going to choose to use blind work expenses, BWEs, rather than IRWEs, because BWEs will let them keep more SSI. But if a person is not blind and they can't use BWEs, and they do have work-related expenses that are also needed because of the disability, then they can use IRWEs to keep more of their SSI. So examples of IRWEs are the same ones that we had looked at for SSDI: medications, medical and therapeutic services, medical devices and supplies, transportation needed because of a disability, such as paratransit, Uber or Lyft if the person's not able to drive. Same thing with paid rides from a friend, vehicle modifications, if they have a vehicle and they need to have hand controls or a wheelchair lift installed on it, the cost of those vehicle modifications could be an IRWI. Any work-related mileage on a modified vehicle at the IRS mileage rate, which in 2025 is 70 cents a mile. Assistive technology, job coaching if the person pays for it, attendant care if it's needed to prepare the person for work, home modifications needed for work, such as if a person needs a ramp, wheelchair ramp, to be able to get in and out of the house to go to work, service animal expenses, prosthetic devices. If a person lives in a residential program and they pay for a cost of care, they're paying for a portion of staff costs, and the staff are helping them prepare for work, then a portion of that payment for cost of care can be allowed as an impairment related work expense as well. Now, let's go back to Tupac again. Same SSI to start out with, same $1,285 a month gross wages. But now he's paying a total of $500 a month for Uber to get to and from work because he's unable to drive due to his disability, and for medical expenses needed to treat his disability so he can work. So both the Uber and the medical expenses would be allowed as impairment related work expenses. Tupac pays for them out of pocket. They're needed due to his disability, and they're needed at least partly for work. So now let's look at how much SSI Tupac would get with $500 a month of IRWIs and what his net pre-tax income would be. So back to our SSI calculation sheet. We still have $1,285 of earned income on line 8. So where is the impairment related work expenses or IRWI line? It's line 15. So let's take a look first, just for a reminder, at how much SSI Tupac would get if he did not use IRWI and what his net income would be. So without IRWI, his SSI payment on line 30 would be $454 a month, and his net pre-tax income would be $1,739 a month. Now let's put in the $500 IRWI on line 15 and see how that changes. So please go ahead and enter the IRWI on line 15 and see what answers you get for his SSI payment on line 30 and his net pre-tax income on line 37. All right, and I'm going to do it on my sheet. $500 of IRWI. And now his SSI payment went up on line 30 from $454 to $704 a month. It went up by exactly $250, which is exactly half of the $500 he paid for the IRWIs. So he paid $500. He gets to keep an extra $250 of SSI, half the amount he paid for the IRWIs. So IRWI is offsetting half of the $500 in expenses he paid for. His net pre-tax income is $1,489 a month. It's $250 a month less than when he was working and not paying for IRWs. But it's better than having his net income go down by $500, which would happen if he paid for those expenses but did not use IRWI. All right. So let's go back to the IRWI line, line 15, change the $500 to zero and prepare for another work incentive. Question 9 for you. A plan to achieve self-support or pass helps a person reach a work goal by qualifying them for higher SSI payments than they would get without pass to help them pay for expenses to reach the goal. Is that true or false? That is true. So a pass helps to offset out-of-pocket expenses a person needs to pay for to reach a work goal. It enables them to get higher SSI payments than they would otherwise receive up to the maximum. And the higher SSI payments offset the out-of-pocket expenses to reach their goal. So examples of pass expenses. Actually, before we go into examples of pass expenses, I'll mention that a pass requires a person to have a specific work goal, particular job or business, with an earnings goal attached to it. Typically, if a person is going to be working in a particular job, their goal will be full-time employment in that job. If their goal is self-employment, having a business, then their goal would be to have a certain amount of net earnings from that business. And the goal is always, if the person reaches their occupational objective, that they will rely much less on benefits from Social Security, such as SSI, down the road. But in the short term, they can receive higher SSI payments to offset the expenses to reach the goal. So examples of past expenses would be job coaching or coworker support. I've helped people use PASS to pay a coworker to give them on the job support. It's sort of like job coaching. Transportation costs, pretty much across the board, even including the cost of buying and insuring a car, which is a very popular expense with passes. Education expenses, tuition, books, fees, tutoring, if the education is needed to reach the goal. Job-related equipment, tools, uniforms, computers, etc. Childcare, if that's needed to work, or complete education or training to prepare for work. Expenses to start a business, assistive technology, attendant care, therapies, and various other expenses to reach the work goal. So we're going to go back to Tupac again. And as usual, he starts out on the maximum SSI. He's working and earning $1,285 a month gross wages in a part-time job. But his employer offers to boost his hours to full-time if he completes a training course. And he'll need to pay $500 a month for the training course for 12 months. So he now has a work goal to advance from part-time work to full-time work. If he achieves that goal, down the road, he will be less dependent on SSI, and he has an expense that he needs to pay for to reach that goal. So first question for you is, does he seem likely eligible for pass? And the answer to that one is yes. He ticks off all the boxes. He's got the work goal. He needs to pay for an expense to reach that goal. And if he achieves the goal, he will be less dependent on SSI because he'll have double the earnings that he does now. Right? Then we want to figure out how much SSI he'll get using the pass and what his net pre-tax income will be. So once again, let's go to our SSI calculator. Still got the $1,285 of earned income on line 8. And now let's look for the pass line. That's all the way down on line 24. Plan to achieve self-support or pass. That's where we're going to enter the $500 that he needs to pay for 12 months for the training to reach his goal. So if you can go ahead and enter $500 on the pass line and then figure out how much SSI he'll get on line 30 and what his net pre-tax income will be on line 37, you'll have those two answers. Okay, and I will do it on my sheet here with $500 of pass expenses. His SSI payment is $954 and his net pre-tax income $1,739. Those are the same dollar amounts we had when Tupac used blind work expenses, BWE, to pay for $500 worth of expenses. This tells you that when a person uses a pass who gets SSI and earned income, the pass will typically offset up to 100% of their out-of-pocket expenses, just like BWE does. Okay. Right. Question 10. A person can only use a pass if they already receive SSI. True or false? That one is false. In fact, if a person is receiving SSDI instead of SSI, and their SSDI income is high enough that they don't qualify for SSI, they can actually use a pass to qualify for SSI. So let's look at a different person who's going to do just that. So this is Liv, who receives $1,090 a month from SSDI, which ordinarily would be too high for her to qualify for any SSI. Is her income low enough for her to receive SSI? I already told you it is not. Let's go ahead and pull up the SSI calculator to prove that. And I'm going to clean up the SSI calculator. You can do this by simply exiting out of it without saving it, which is probably a safer way, and then open a clean sheet. But I'm just simply deleting all the data that I've already entered into it. So now, if Liv gets 1,090 a month of SSDI, that is unearned income That goes on line 4. The SSI calculation subtracts only $20 from unearned income, and the countable unearned income is 1,070. If we scroll down, you'll see that the SSI calculation takes the 1,054 maximum SSI payment, here called the SSI base rate on line 28, that's 1,054, and it subtracts the countable income. Well, if Liv's countable income from SSDI, the unearned income, is more than the maximum SSI, then when you do the subtraction, her SSI payment is 0. She's not eligible for any SSI ordinarily. And then her net pre-tax income would be just the 1,090 SSDI that she receives. Okay. However, if Liv has a work goal, which she does, her work goal is to be an HVAC technician, and she needs to pay for a course to reach her goal. She needs to pay $900 a month for 24 months to complete the course. She can submit a pass to pay for that course and apply for SSI. So without the pass, we saw she was not eligible for SSI. There'd be no point in her applying. But if she uses a pass to bring her countable income low enough to qualify for SSI, then she can apply for SSI and receive it once her pass is approved. So she's got a work goal. She wants to be a full-time HVAC technician. If she reaches that goal, presumably she'll have pretty substantial full-time income, high enough to ultimately stop her SSDI payment to make her less dependent on benefits from Social Security. And she has an expense that she needs to pay for to reach that goal, $900 a month for the course. So we want to figure out how much SSI she'll get with the pass and what her net pre-tax income will be. So if we return to your SSI calculation, so you can go ahead and enter 1,090 on the unearned income line, line 4, which is the SSDI that Liv receives. And now we're going to be looking for the pass line and enter $900 there. Once again, that's all the way down on line 24. So please go ahead and enter the $900 for the pass expenses and see how much SSI she'll get on line 30 and what her net pre-tax income will be on line 37. All right, and I will do the same thing, entering $900 of pass expenses. Liv's SSI payment on line 30 is $884, and her net pre-tax income is $1,074 a month. And that means her net pre-tax income, after having paid the $900 a month for the training course, will be 1,074, and that is exactly $16 a month less than her 1,090 a month SSDI. So when she was getting only SSDI and not using a pass, she was probably spending the full amount, 1,090 a month, on her living expenses. With the pass, she'd have 1,074 to pay for living expenses, $16 a month less than she did without the pass, getting only SSDI. So she's going to have to be able to reduce her living expenses a little bit. But if she can get by on 1,074 a month to pay for living expenses, she can use this pass and it will be well worth it. Because if she completes the course, which she needs the pass to pay for, she'll become a full-time HVAC technician and she'll have significantly more income than not working and getting only SSDI. And if she earns enough, which is likely if she is a full-time HVAC technician, she'll have significantly more net income with just her wages as a technician than she would if she, this is hearkening back to the SSDI training, if she worked part-time, did not do substantial gainful activity, and kept her SSDI. She'd have more money working her way off SSDI than limiting her earnings and keeping SSDI if she gets a good enough salary as an HVAC technician. Okay. So Liv can use a pass to reach her goal, and it will qualify her for SSI. So she'll need to submit the pass, and once the pass is approved, she'll need to apply for SSI. And then the pass can be put into effect. Question 11. If a person's earnings are high enough to reduce their SSI to zero, they will lose SSI and Medicaid eligibility. If they later stop working, they must reapply to get SSI and Medicaid back. Is that true or false? Fortunately, that is false. And that brings us to my favorite SSI work incentive. It's called 1619B. You may not remember that. That's just the section of the Social Security Act that created this rule. And what 1619B does is protect SSI eligibility if a person's earned income, if their earnings from work, reduce their SSI payment to zero. 1619B says, if your earnings from work go up high enough that your SSI goes down to zero, you can still stay eligible for SSI. Well, what good is being eligible for SSI if you're not getting SSI payments? It's good in two ways. 1619B is a double safety net. Number one, it protects Medicaid eligibility, lets the person keep their Medicaid even though their SSI has been reduced to zero. And secondly, if their earnings later drop low enough or they stop working for any reason, they can get the SSI payments back just by calling Social Security and verifying the change in their earnings. They don't have to reapply and start over. This means a person on SSI has nothing to lose working full time because even though their SSI may be reduced to zero, they can still keep their Medicaid. And if anything happens to their earnings later for any reason, they can get right back on SSI quickly and easily just by contacting Social Security and verifying the reduction or stoppage of their earnings. And best of all, 1619B has no time limit. A person could work their way off SSI this year, years later. They could stop work, go right back on SSI payments, and keep their Medicaid the entire time. So to be eligible for 1619B, person has to continue to have a disability. They can't have medically recovered from their disability. They have to otherwise be eligible for SSI. They still have to have countable resources below the limit, 2,000 for an unmarried individual, 3,000 for a married couple. They have to need Medicaid. If they've just simply used Medicaid at least once in the last year or expect to use it at least once in the coming year, they're considered to need Medicaid. They usually have to have annual earnings below a certain limit. This year in the state of New York, that limit is a little more than $64,000 a year. Now, that's a pretty high income from work for most people on SSI. Most people on SSI never achieve earnings that high. But in some cases, even if a person's earning more than that, they may still qualify for 1619B, especially if they have higher than average Medicaid expenses. So let's look at Tupac once again. So Tupac again starts out with the maximum 1,054 a month SSI. And now he starts a job earning $5,200 a month gross wages, which is $62,400 a year. His SSI is reduced to zero. He has less than $2,000 in countable resources. He's otherwise eligible for SSI. And let's assume that he is using Medicaid, that he needs Medicaid. So first question is, will he be eligible for 1619B? Just a quick reminder about the earnings threshold for 1619B, a little over 64,000. Tupac is earning 62,400. So first question for you, will he be eligible for 1619B? And the correct answer is yes. He has checked all the boxes for 1619B. So since he's eligible for 1619B, next question, what will happen to his Medicaid? Will it continue or stop? And the correct answer is it will continue. 1619B protects his Medicaid eligibility. Next, what will happen if he stops working later? And the correct answer is he'll be able to get his SSI back just by contacting Social Security, will not have to reapply. And finally, what will his net pre-tax income be? Well, you didn't even need his SSI calculation for this. You know that he's earning enough to reduce his SSI to zero. So his only income will be his gross wages, and his net pre-tax income will be $5,200 a month, way more than the SSI he worked his way off of. Question 12. If a person who gets SSI does paid work long enough, they may be switched from SSI to Social Security Disability Insurance, SSDI. True or false? That is true. So if a person pays Social Security taxes on their earnings long enough, they can qualify for SSDI. And we reviewed eligibility for SSDI during the SSDI portion of this training. So there are many people who start out on SSI, but then get switched to SSDI later because they work and accumulate enough work credits, Social Security work credits, to qualify for SSDI. Or in many cases, they start out on SSI and then they qualify for SSDI on a parent's record later if their parent starts getting Social Security retirement or SSDI or the parent dies. And for, rare cases, people may be able to get SSDI on the record of a deceased spouse if they're 50 or older and become eligible before age 60, but that's going to be rare. So many people start out on SSI, but then get switched to SSDI. So workers who get SSI should report their earnings to Social Security every month. We had said about SSDI that people getting SSDI who go to work need to report their earnings, but they don't necessarily need to do it every month. People who get SSI do need to report their earnings every month. And that's because fluctuations in earnings will cause SSI payments to fluctuate up and down. And you want to be sure that Social Security has a correct record of earnings so they can adjust the SSI payment correctly. And just like workers who get SSDI, workers who get SSI can get free benefits planning to help them navigate the Social Security system and the work incentives by either asking their Access VR counselor if they have a case open with Access VR, or by calling 866-968-7842 and asking to be connected with their WIPA project, Work Incentives Planning and Assistance. So that'll provide either option will give them free benefits planning. Welcome back. So before we go into our case study, I wanted to remind you about the SSDI and SSI cheat sheet we have available. We covered the SSDI portion on the SSDI training. If you scroll down to the third and fourth pages, this is also an SSI cheat sheet. It describes what SSI is, the eligibility criteria, the resource and income limits, the maximum amount of the benefit when it's paid, the health insurance that comes with it, namely Medicaid, summarizes the SSI work rules, the fact that the person on SSI goes to work, their SSI is reduced by less than half of their work earnings, but they can use other work incentives to keep even more SSI through the student earned income exclusion, impairment related work expenses, blind work expenses, and PASS. And finally, 1619B, if they earn enough from work to reduce their SSI to zero, stay eligible for SSI, keep Medicaid, be able to get quickly and easily back on SSI if earnings later drop low enough or stop. Um, and the usual annual earnings limit of a little over 64,000 a year for 1619B, and reminders about reporting earnings and getting free benefits planning. So you also have the SSI calculation. You are welcome to share the cheat sheets with individuals if that would be helpful as kind of a brief summary for their use. And now let's go on to a case study. Unfortunately, we were not able to recruit a real person to participate in this case study, in contrast to Nancy, who participated in the SSDI live case study. But Jamal has a very similar situation to a real person I worked with in the past. So let's review his situation. Jamal attends community college classes 12 hours a week. His goal is to be a full-time chef. He just started a job working 12 hours a week as a dishwasher in a restaurant. He earns $15 an hour, and his current gross wages average $800 a month. He is not blind. He's 20 years old. He currently receives the maximum SSI for an unmarried individual of $1,054 a month, along with the Medicaid it provides to him. And we're going to consider three work options for him. First, his current earnings, working as a dishwasher 12 hours a week, earning $800 a month average wages while he's in community college classes. Then he wants to eventually be a chef. One step in that direction could be a full-time prep cook job. And I calculated using onetonline.org that a typical hourly wage for a prep cook would be $16.45 an hour in Jamal's area, which works out to $2,851 a month gross wages on the average, or a bit over $34,000 a year gross wages. If he reaches his goal to be a chef working full time, in his area, the median wage for a chef would be $29.32 an hour, or working full time, a bit over $5,000 a month, almost $61,000 a year. So he'll need to pay for certain expenses for work, taxes, of course. And I used an online tax estimator to estimate the taxes he would need to pay in each of those job scenarios. Public transportation, he'd be paying about $5.80 round trip to get to and from each job. That's about $50 a month working 2 days a week, which is what he's doing currently. About $126 a month working 5 days a week, which would be full time. And he needs to pay $100 a month for copays for therapy. So our next question is, which work incentives might he be able to use? So initially, when he's a dishwasher, working 12 hours a week while he's attending community college classes, and he is 20 years old and receiving SSI, which work incentive could he use then? And the correct answer is the student earned income exclusion, or SEIE. Because he's a student under age 22. He is regularly attending school with college classes, needs to be attending at least 8 hours a week. He's attending 12 hours a week. He gets SSI. He can deduct all of his earnings each month up to $2,350 a month. He's only earning $800 a month, so much less than that. And up to $9,450 a year, or sorry, $9,460 a year. If he earns $800 a month for 12 months, that would be $9,600. So only in the last month of the year would he not be able to use the full amount of the student earned income exclusion. He would use it up in a little over 11 months. But since he just started his job and it's the middle of the year, in this case, he will not run out of his annual cap for the student earned income exclusion in the current calendar year. Now, when he's a prep cook working 40 hours a week, earning $2,851 a month, or over $34,000 a year, which work incentive would he likely use then? And the correct answer is 1619B. That's the rule that says if earnings are high enough to reduce SSI to zero, and that would almost certainly be the case, earning $2,851 a month actually would definitely be the case. That level of earnings would reduce his SSI to zero, but 1619B would let him still keep SSI eligibility, which lets him keep his Medicaid and be able to go right back on SSI payments if something happened to his job later. What about if he were a chef earning almost $61,000 a year gross wages? Well, for this one, let us pull up our PowerPoint again, just to get a reminder about the earnings limit for 1619B. So the usual annual earnings limit for 1619B is a little over $64,000 a year. And how much is would Jamal be earning likely as a full-time chef? He would be earning less than 61,000. So he would still be eligible for 1619B, working as a full-time chef. Now, when we look at his expenses, you'll see there is one expense here that could be allowed as an IRWI, the therapy. But since it's only $100 a month, it would not be enough to qualify him for SSI when he was working either of the full-time jobs, prep cook or chef. His earnings would just be too high. While he's a dishwasher and still in community college, he wouldn't need an impairment-related work expense because the student earned income exclusion alone would let him keep the full amount of SSI. Although, if he worked every month of the year during the last month of the year, he might use that early when he ran out of the student earned income exclusion annual cap. But that's not going to be an issue this year because he didn't start work until the middle of the year. Okay. So let's take a look at a bottom line comparison for Jamal. Yeah, correct. Quick glitch there. Okay. So the bottom line comparison shows our three comparison scenarios. He's working 12 hours a week as a dishwasher, making $15 an hour using the student earned income exclusion in the first scenario. The second scenario, he's working 40 hours a week as a prep cook using 1619B. And in the third scenario, he is working 40 hours a week as a chef and also using 1619B. So looking at his income and his expenses in each of these scenarios, working as a dishwasher and using the student earned income exclusion, he keeps the full $1,054 a month SSI. He's paying the taxes, the public transportation, and the therapy. And his net income before, actually after taxes, is $1,637 a month. When he's working full-time as a prep cook, his earnings are too high to get any SSI. He gets just his wages, $2,851 a month. After paying over $500 in taxes, public transportation, and therapy, his net income is $2,124 a month. So it's significantly better, even though he's not receiving any SSI, than if he worked part-time as a dishwasher, used the student earned income exclusion to keep the full amount of SSI. What if Jamal had been working only part-time after he was no longer a student and couldn't use the student earned income exclusion? Then his SSI would be reduced, not to zero, but it would be reduced, and his income might actually be less than his income working 12 hours a week as a dishwasher and using the student earned income exclusion. So one thing to consider for students who are using the student earned income exclusion is that you usually want to plan to earn more after their student status ends. But luckily, that's usually the case. If they're no longer a student, they have time to work more hours, possibly full time, so that they'll have higher income. And then finally, working full time as a chef, earning over $5,000 a month, paying over $1,000 a month taxes, as well as public transportation and therapy. Jamal's net income would be over $3,700 a month. So this comparison shows Jamal that he's on an excellent track for reaching his goal, and continuously increasing his net income. Initially, working part-time while he's a student, keeping the full SSI, then working full-time as a prep cook until he has the credentials to be a full-time chef. And with each scenario, his net income increases. Right. So thank you very much for participating in this training. And please do try this at home. Please use this information with individuals and always refer them if they're receiving SSDI or SSI and either working or seeking work, always refer them for free benefits planning. You have learned just enough to not be dangerous, but the benefits planners are the ones who are the experts who can advise people um, about the deeper details. However, it's still worth it for you to take this training so you can be a cheerleader for employment. You can encourage people to work, give them basic information about the advantages of work and the basics of the work incentives, but always refer them to a benefits planner to help them navigate the rules and understand the finer points. Thank you again.